You just realized your business needed to hire someone yesterday. How can you find amazing candidates fast? Easy. Just use Indeed. Stop struggling to get your job post seen on other job sites. With Indeed sponsored jobs, your post jumps to the top of the page for your relevant candidates, so you can reach the people you want faster. According to Indeed data, sponsored jobs posted directly on Indeed have 45% more applications than non-sponsored jobs. Don't wait any longer. Speed up your hiring right now with Indeed. And listeners of this show will get a $75 sponsored job credit to get your jobs more visibility at Indeed.com/PODKATZ13. Just go to Indeed.com/PODKATZ13 right now and support our show by saying you heard about Indeed on this podcast. Terms and conditions apply. Hiring? Indeed is all you need.
Success is calling, don't ignore. Take control, unlock the door. Dreams ain't distant, they're right in sight. Sam will help you get it right. He's got the roadmap, got the plan. Helping you take a stand, financial peace, a future bright. San Nicolaca shows the light. Call 385-323-2493. Change your life, now's the time. Build your wealth, make it strong. Leave a legacy that lasts long. He's got the keys, no need to wait. Financial freedom. Yeah.
Welcome back to the Fuel Your Legacy Show. I'm your host, Sam Knickerbocker, and today we have Chad Terpstra on the show. He's been in this industry, chasing his journey and his passion for a while, and now he's wondering, where does this go and how can he help more people live their dream? So, Chad, first time we met was at a conference.
Yes.
Which I noticed right away. You're, I think, excited to be there, excited to be learning, but more importantly, you're eager to find out, how do you progress in your life and in the industry that you've chosen to be in? So I'm curious, how did you get into the industry and when did that whole journey start?
It was kind of interesting because when I first got started in the life insurance industry, it was not something I ever expected or thought that I would be doing. I always make the joke that we don't grow up saying, Mommy, I want to sell life insurance when I get big. It's not one of our dreams. But in 2004, I had been in sales for about two and a half years. And I just happened to meet somebody who was in the life insurance business. And they said, what have you got to lose? Come give it a shot, take a look at it. And just like everybody else, I was 27 years old, broke, and I saw the money that was available. And I was like, okay, what have I got to lose? So I gave it a shot, and May will be 21 years. I got started, never looked back. And it's been quite a ride, as they say, quite a journey. But I've had a lot of fun, served a lot of people, and it's been fantastic.
But what's been one of the best things that has come from you being in this industry, whether that's knowledge or people you serve? What's been the highlight of the career so far?
I love it when people have the opportunity to get education, because so many people today were taught to get an education, get a job, get a 401k, work hard, be loyal, and 30 or 40 years later, your company and the government will take care of you. Well, we all know that that's not so realistic anymore. Between Social Security and 401ks and all the stuff that our parents counted on coming up and building their lives, we don't necessarily have available to us anymore. So people, when they take that traditional route and then they meet somebody like me and I say, look, you should do this. You should look at this. You should try this. Think about this, because what do you want to accomplish in your life? And if I ask you to tell me 100% honestly, is what you're doing now going to get you there? Mm-hmm. They have a realization that, no, it's not. I can't put money in my 401k and rely on Social Security and think that I'm ever going to be able to comfortably retire. People have realized that. So education is a very important part. It's a very rewarding part of being in this industry.
So do you have a client example of you were able to help somebody go from point A to point B, and what did that look like in that experience for them?
For them? Well, there's two different avenues you can go. And I actually have one of these that just happened the other day, because one of the products that we sell in this industry is fixed index annuities. And this is a specific one because it happened to a family member. It happened to my uncle. He got one of these products from me back in 2016. And it was a very specific product that served a very specific purpose. And he was actually the first one to hit that purpose. So I called my aunt the other day when I received the statement, and I was like, "Hey, do you have any idea what just happened?" She's like, "No, I saw the statement, and I was like, I need to call Chad and find out what that means." And I was like, "Well, this is what it means." She's like, "Really?" I'm like, "Yeah, you just hit the absolute purpose of what I sold you this product for." And I love it. I love those kinds of success stories because they're at a point now that specifically my aunt and uncle, that they're retired. I was able to double their money in about a 7 to 8 year period, and now give them lifetime income that has just continued to grow and grow and grow. So, family, I mean, everybody's great to hear those kinds of stories, but when it's family, it's even better.
Yeah, I don't know why it seems better when you're able to help the people you love. And I think that's a big thing. If we go back to when you're 27 years old and you're starting to get into this industry, obviously money is a driver, right? Wouldn't want to say that it's not. But what other aspects of what you saw, what you were presented, it made you believe, I could do this. I could actually maybe get to my goal one day?
In all honesty, I had no idea. I was going into an industry that I didn't know anything about. I'm an actor. That's what I was doing. I got introduced to the life insurance industry in LA, and I'd been pursuing an acting career for several years. But one thing I also said is that I wasn't going to be the struggling broke actor my entire life. I was going to do it for a period of time. I've always liked making money. I've always liked business. I've always liked trying new things and challenging myself. So once I decided to walk away from the acting, the pursuit of acting, I got into sales. But when I got into life insurance, I was like, can I do this? Maybe. Mm-hmm. If I give it a shot, will it work? It might not, but I'm going to give it a try. And it just happened to be one of those things. I think all of us find something in our lives that we're good at. And once I learned the life insurance business, I realized that I'm very good at it. It's a passion. It's a commitment. You get knowledge about it, and you can really make a difference in people's lives, because I haven't had a lot of these, only a couple of times that I've actually had a death benefit payout in 20 years. That's saying something.
Yeah, I mean, it's good in the fact that people haven't died.
Yeah.
Also, I think that having those death benefits pay out really helps somebody, not just you, but the people, all the other clients understand what's the real value that you actually are offering. Because a lot of people think life insurance is kind of a scam, or it's just they're going to be they're paying into it for forever and they're never going to get any benefit. Until you see what it's there for, then it sometimes can start to feel that way yourself even.
As sad as it is when somebody passes away, for the loved ones especially, but to be able to present a family with that check and say, this is why you bought this. This is why I sold it to you. They're so thankful that they made that decision at the time that they did, even if they were kind of wondering about me and
Sure.
my intention and what I was selling them. That day happens because, as we all know, Father Time is undefeated. Mm-hmm. He's going to get all of us eventually. But when that day comes for that family, they're so thankful that they made the decision, because now they don't have to worry.
Yeah, and that's gaining that trust. So what did you learn from learning acting or trying to learn acting? I don't know how successful you were at that. Obviously, you chose to get out of it. So maybe
there's not Brad Pitt. That's for sure.
Maybe there's a certain level of success that you weren't good at it. But what did you learn? I mean, anytime you put your head to something, you actually try and learn it, you're going to gain something, and it's going to help you build those skill sets, are going to help you build into the next thing. So what did you learn from your acting career that helped you better relate or help people in your financial education career?
I learned persistence. Never give up. If you want to do something bad enough, you've got to go after it. But you also hear us how I'll kind of parlay that with the acting career, is that I gave myself a time limit to either make it or not. So I wouldn't be sitting here today if I'd been at the Academy Awards last week.
Sure.
Because
maybe.
So that could have happened. But you go for it until it works, but also be realistic as well. You don't want to be 20 years in the life insurance business making 10 grand a year, still trying to pick away and think that you're going to be a millionaire someday. There comes a certain time where you're like, either I'm going to make it or I'm not.
Right.
But persistence is key. The thing that I noticed over the years of my career is so many people come in, they're like, I'm going to get licensed. I'm going to make $10,000 my first month. If I don't make $100,000 my first year, it didn't work. I quit. Well, the number of people that actually happens to,
it's infinitesimally small.
But
I would say that regarding that personality who believes that, I just recently heard one of my mentors say, he says, most people, they don't want to be part of a get rich quick scheme, but also they don't want to get rich slow. So if you invite them in, say, okay, this takes work, it takes time, takes effort, it's going to hockey stick. Eventually over time, you're going to learn a craft and you're going to be able to increase your income. When they hear that, they're like, oh, it's taking too long to make money. You're like, wait a second. You don't want to be part of a get rich quick scheme, but then you're expecting to get rich quick. It doesn't like one or the other has to be true. And so I think that oftentimes you have to determine, I'm willing to take the time and invest it and learn and get stuff. For me, in the financial education space, I started off my first year, I only made like $16,000.
That's normal.
And I was like, man, this.
I think that's about what I made my first year too.
It's like, I don't know if this is going to work for me, but I do know that if I keep going, the people who are leading me in this industry, I can see that time beats everybody. You know, like just like you said, time's going to get everybody, and everybody's going to die someday. If you stay at something long enough, you'll succeed eventually. And
well, the one thing that stuck out to me that was kind of a turning point in my career was my mentor at the time in my first company. The first time he showed me making $10,000 in a week.
Okay.
I was looking at his computer and he pulled up his commission statement. He's like, "That's what I made this week," and I was like, "Wow."
Wow. How do you do that? Right?
How do you do that? Yeah.
Show me how.
It obviously works. So show me how to do it. And I was probably 4 months in the industry. I was brand new licensed. I was still learning what I was doing. But once he showed me $10,000 in a week, I was like, let's do this.
I made $16,000. Then I went and got some more mentorship. And I was like, what am I missing? And it had to do with personal beliefs about that. I didn't believe I was worthy of success. I came from door-to-door sales, made $100,000 in a year. So I knew I could make money. But I didn't feel like those skills transferred from door-to-door sales into the financial education industry. Because door-to-door, it's a very quick sale. Generally, if you're on the door for more than 10 minutes, I was selling pest control. So every door is a little different. But like if you're on the door for more than 10 minutes, you're probably wasting your time and theirs. And so you should just move on. And so that was kind of the transactional business I was used to. So moving into the financial education space, where, as you mentioned, it's a lot more relationship driven. That was really a new thing for me that I'm like, okay, I actually have to follow up. On door to door, you don't follow up. You just hit the next door and hit the next door. And then once you burn through the area, you go to the next. And ideally, you really were able to clean up maybe 50, 60% of the homes in that you got given. And then you go to the next area. But this was very different where it's like, okay, now we're building long-term relationships. We're establishing ourselves as professionals. And we have to change the public's perspective of what we do and how we help them. And so made about $48,000, then $75,000. Then $88,000. And that was all still based off of the belief that I'm just going to do it by myself. I didn't want to build a team. I didn't want to build a business. I just thought
it was just you.
Yeah, I'll just
hitting the streets, hustling, knocking on as many doors as you can.
I like helping people, but I don't know that I want to build a team of people. And I think that sometimes, I know it held me back because the next year, once I decided to stop doing it my way and start doing it the way that I was being taught to do it, then my income jumped over 6 figures. Actually, went over 200. And then 250 and so on. So I think that the challenge is, are we willing to be coachable? But that's why I asked, like, from your acting career moving into this, like, what was that transition that helped you? So persistency helped. What was it like changing the people that you knew, their perspective of how you were going to serve in the marketplace anymore?
That's actually a very good point that a lot of people don't understand when they first get into sales, because you said you come from door to door. So do I.
Yeah.
After I stopped acting, I went into door to door, and from door to door is where I got introduced to life insurance. And that's one of the key things that you have to realize is most sales is a one shot type of thing. When I meet you, I have to make an impression on you, and I'm either going to sell you as to why you need my product, or you're going to sell me as to why you don't.
It's a binary.
It's a binary, completely transactional business. You get into the financial industry, one thing you learn really quickly is that you almost never make a sale on the first presentation.
Even if you could, I don't know that you should, because I think that
And I absolutely agree.
To our beginning, it's kind of what you said, what you like the most is education. And if people get educated, they need to choose into the direction that they want to take their finances rather than you selling them something. I always see myself more as a service provider. Like I'm just here, I'm licensed, obviously, I'm able to facilitate, but I'm a facilitator on you reaching your goals. If I'm the only one who understands why we're doing what we're doing, then that puts you in a losing position because just like you could die any day, I could die any day. And if I'm the only one who knows what's going on, that's a problem for you.
Absolutely.
So it's actually really important that the clients actually understand and they get educated. And that's why I've always referred to myself more as being in insurance or any type of financial industry. I just consider myself being in the financial education industry, teaching people how money actually works so that they can decide for themselves. Most people, I mean, everybody I work with is a grown adult, so they can make their own decisions about how they should.
But here's one thing that we would probably agree on as well is if you push somebody to buy on the first meeting, what's more often than not going to happen?
They are not.
They're going to sleep on it. They're going to think about it. They're going to pray about it, or whatever they do when you walk out that door. Mm-hmm. And then they're going to call you up the next day and be like, "I changed my mind."
Yeah, I changed my mind.
Because I sat there for 2 hours and handled objection after objection after objection after objection to get you to buy, to get you to say yes. I walk out feeling good about myself, but then I get that call tomorrow, and you're like, we decided not to do it.
Yeah. And
then what did I just spend 2 hours of my time for?
Right. You wasted your time. So it's better in a relationship type of interaction. And this isn't just financial industry, but this could be anything. This could be real estate. This could be health. This could be anything. If you give shorter amounts of time, like maybe an hour one day and then an hour another day, you start to build a consistency of relationship rather than all at once and trying to get it all done at once. And so
now there is a difference when you're new in the business, because when you're new in the business, you're trying to make money. You're trying to make money.
I think that's the one. You got in because you're broke. I have a different story, right? I had almost $100,000 in the bank when I got started.
So you had the luxury to take time off.
Unfortunately, I treated it like a luxury rather than went at it hard.
Right.
Because like I said, my first year I only made $16,000. So I'm glad I had that. But I only ever done this full time. I've only ever done serving people from a 100% focused perspective. And so
you just realized your business needed to hire someone yesterday. How can you find amazing candidates fast? Easy. Just use Indeed. Stop struggling to get your job post seen on other job sites. With Indeed sponsored jobs, your post jumps to the top of the page for your relevant candidates, so you can reach the people you want faster. According to Indeed data, sponsored jobs posted directly on Indeed have 45% more applications than non-sponsored jobs. Don't wait any longer. Speed up your hiring right now with Indeed. And listeners of this show will get a $75 sponsored job credit to get your jobs more visibility at Indeed.com/PODKATZ13. Just go to Indeed.com/PODKATZ13 right now and support our show by saying you heard about Indeed on this podcast. Terms and conditions apply. Hiring? Indeed is all you need.
I think that when somebody's coming into this industry, you're dealing with somebody's financial future. Maybe it's not their retirement assets. Sometimes it is, but a lot of times it's just like life insurance. But life insurance has amazing impact, and it's designed to be there when they die. And that's the purpose of life insurance.
That's the purpose of it.
It's to be there when they die.
You and me are almost never, I mean, there are examples, of course, but you and me are almost never going to actually experience the benefit of life insurance.
Yeah, I mean,
because when
we're going to die,
before our kids or whoever are going to get the benefit.
Yeah. And so I think that when somebody's coming into the industry, it's actually better if they aren't needing money, right? If you need money and you're trying to help somebody with money, and this is with any sales, if you're needing money, sales can be difficult because you don't learn how to manage your energy. And if you don't know how to manage your energy, then the person who you're trying to influence to purchase your product is going to smell that on it. So it's not just financial products, it's anything. Although I do believe that there's more of an ethical challenge or dilemma inside of the financial industry. And that's why there's so much regulation and disclosures to make sure that those are controlled as much as possible. When you get into the industry, everybody enters this industry differently. Sometimes they enter and they have a salary position. Sometimes they enter and they are salary plus commission. Sometimes they enter, they're just 100% commission. Sometimes they're working for a large company, sometimes a small company. Some people go from large companies, go to small companies. Some people go from small companies to large companies. But you came into this industry. What was the structure of the company you came into? Why did you choose that structure, or was it just happenstance? And what have you learned over the 20 years of your career that's led you kind of to where you are now?
Well, I got started in the industry in a multi-level marketing structure. So a lot of people have been involved in multi-level marketing. The most famous company out there is Amway. So everybody not everybody, but a lot
almost
of people.
Everybody's heard of it.
Almost everybody's heard of it.
That's all.
You've heard of some company.
It's called the Worldwide Leadership Group now.
Is it?
Yeah.
Okay.
They changed the name because I think there still is an Amway, but they wanted to get away from the Amway. And to be fair, Worldwide Leadership Group their offerings are a lot more expansive than Amway. This is not a commercial for Amway. I don't represent them. I wouldn't ever recommend somebody going to work with them.
Right.
But they did create a lot more partnerships rather than just Amway products. So you can actually get paid if somebody shops on Nike website or Home Depot website or these different places. So they did create partnerships. Still, in a traditional marketing, like traditional MLM, let's just talk about that. Whether it's oils or lotions or potions or whatever, in traditional marketing, what happens is the product that's being sold costs, let's say, $10. But for all of the people in the upline and everything to make money,
everybody's getting a little piece.
Everybody gets a piece of it. So they have to increase the price of that. So if I were to go buy the same product from the grocery store, it costs way less than if I went and got it from a multi-level marketing company.
Mm-hmm.
And the sell is, well, if you're part of the multi-level marketing, then you make a little sliver off of everybody's sale. So that's the incentive to get everybody to use these expensive products.
And that was one of the things we used to do comparisons. We used to be like, hey, if you buy X product through X company, you can go to the grocery store and get it for a much lesser price. Why? So why would you do that? But
in the financial industry,
that doesn't exist.
Yeah, it's like all you are is a service provider of sharing that product, correct?
Like I'm currently an independent agent. So I'll go back a little bit. Into the MLM stuff. But I'm currently an independent agent. If you buy life insurance from me as an independent agent versus buying it from me as somebody in an MLM structure, it's going to cost the exact same amount.
Yeah, that's regulated by commission.
There is no markup. It's not like you're going to pay more for your policy through MLM than you are from an independent agent or from a legacy company or anything like that.
So why would somebody, so that's good to know for somebody who's potentially looking at either life insurance or any financial products. It's the same cost regardless of where you get it from. So I think that's important for everybody to know, because some people are like, well, why don't I just go down to my local Allstate or my local whatever? And it's like, look, it doesn't change the cost of it. There's no markup here. It's very different. However, I will say, I want to highlight and have your perspective here, because now you've been in multiple areas of this industry for different companies. What's the pay structure like, though? If we sell the same product, it costs the same. What's the difference in pay for somebody who's working in a multi-level marketing company versus somebody who's working independent?
Well, if you're working independent, it's all on you. If you sell, make what you make the commission. It's 100% on you.
I was going to say, what's like a typical commission in an MLM company versus, so like if I'm a brand new agent, I'm wondering, should I go work for a mom and pop, like 2 or 3 shop, or go work with a bigger financial firm that maybe is an MLM structure or something like that? Or what would I expect as far as my contract or my payout to be to help somebody?
Well, when you first get started in multi-level marketing, at least this is how it was. I haven't been involved in it for a few years. But when I first got started in multi-level, my contract was 30%. So if I sold $1,000 commission product, I make $300. And then the person above me maybe makes their 10 or 15%. The person above them makes their 10 or 15%. The whole 100%, or in a lot of cases, it's 130, 140% that pays out to the field. Everybody along the way gets a cut of it, all the way to the top. Right. So that is one of the big knocks against MLM. And, I did it for a long time. I don't personally have a problem with it, because I think you got to get started. You have to work your way up. You have to earn it. But one of the big knocks against MLM is that you start at 30, 35, 40%, whatever it is, when you're in, and you only go up to 65, 70, 80% max. As independent, you can be 100% contract, 110, 120, 130% contract. So it's all relative of what your contract percentage is. But the benefit to MLM is that if you build a team.
Okay, well, let's talk about this, though, because I want to, before we go into the team aspect, because I think that's a conversation that specifically your story I want to talk about. But more importantly, from a devil's advocate perspective, because there's some people who say that the traditional industry is the better option versus the multi-level marketing structure. And I would say it's like a mixture of maybe multi-level brokerage model and franchise model, kind of like all blended together. A lot of the insurance companies are. Because I guess for me, when I think of multi-level in general, I think of how many people do you have to have under you to actually make money? And can you actually get to the top? Can you actually ever override everybody? Or is there always going to be people above you and like that are taking portions of your income? And when you're looking at like a franchise brokerage, multi-level marketing structure, a lot of these companies are actually structured so anybody coming in can outwork their leadership and get to the top and leave their leadership behind if they want to. So you're not really held down the same way you might be in a traditional oils, lotions, potions type of multi-level marketing company. So there's different regulation, different industries. Some people would say, so like I help people with business coaching and mentorship and leadership. And if you go get a business coach right now, easily, like I would say a low end business coach, they're going to charge you $5,000. Higher end is going to charge you $25,000 to $30,000 to build a business. And ideally, if you're going to go get a business coach, then you're going to be paying the business coach to help you at least make $100K, like get in the game and get established as a professional.
That's everybody's minimum goal when they get into business. That's like the first rung of the ladder.
Yeah.
Is when you make 100.
Yeah, you're on your way. You're not quite killing it. You're not at $1 million. You're not at 5 million. You're not at 10 million. But like you started. You know, the first 100K is the hardest to make, and then after that, it's a lot easier. So what's the price of mentorship? Because yes, it may be in a multi-level marketing structure, you're only getting 30% and somebody else is getting all these other cuts, right? Which you could say, okay, first off, I just want to highlight this. If you're working with an independent agent, they are making more money than somebody who is working in an MLM structure. So two of the things that I hear often is like, you're doing this because you're going to get paid more or something. It's like, no, if you work inside of a multi-level marketing structure, you should know you're getting paid less than if you worked independently. I think everybody needs to know that. Both the clients need to know that, and the advisors and agents, they need to understand that. But from a perspective of mentorship, let's say you're like, I want to hire a contract. I'm just going to go start my own shop. Okay, how much are you going to have to pay for mentorship from somebody who is in the industry and knows how to build a company so you can be successful? So what's that value of mentorship? Because some people would say, okay, I can get more money on my own personal sales, but 100% of nothing is still nothing. Versus 30% of mentorship and leadership is something. So talk to us about that kind of grappling between which is more ideal.
Once I learned the value of it, I've always believed that mentorship is priceless. You know, I've never had a problem with people who are teaching me to be better, helping me to be better, helping me to make more money. I've never had a problem with them making money off of it. You know, the people above me who taught me how to be as good as I am today in the life insurance business deserve what they got off of me, because who knows where I would
if they
be.
didn't help you, they don't make any money if you don't make any money.
If they didn't help me, I probably maybe would have survived a month or two in the life insurance business. And 20 years ago, been out of it and doing who knows what, working at Verizon Wireless or something like that. So mentorship is valuable wherever you get involved in the industry. Don't ever worry about what the person who's helping you is making as a result of their help. All you have to focus on is what you're making. And I'll give you an example away from life insurance. If you had an opportunity to learn from Warren Buffett about investing in stocks, and Warren Buffett said, I'm going to charge you $100,000 to teach you how to make 10 million.
Yeah,
would you do it? I'd mortgage my house. But you do whatever you have to do to get $100,000 to have Warren Buffett teach you how to invest in stocks. Same goes with any business. It doesn't matter if it's MLM. It doesn't matter if it's life insurance. It doesn't matter if it's real estate. You're always going to have a mentor who's going to make money off of you to teach you how to do it. And in my opinion, that's priceless. And I have no problem with it.
Yeah. And I actually have a client who they were making about $100,000 in their own business, and they chose to go take a salaried position under Tony Robbins and Dean Graziosi to learn the process of sales from stage, to learn the process of running online sales, Zoom, and systems and everything, and to become one of their presenters just to learn it. And she took a $40,000 pay cut. So it wasn't a small deal; it was a big deal. But 3 years into that, after she learned what she needed, she was able to leave her original position there and go start her own business and make way more than what she was making before. Yeah, because she had learned the skills. And so I think that there's a value in that mentorship. I just want to highlight that because I know that sometimes different models get touted as better or worse, and it's really just objective. Like, what's the value of that mentorship? In certain models, for you to go from point A to point B, brand new in the industry, to your own independent brokerage or branch, it's going to cost, like, what somebody's going to make off of that mentorship, if you did it as fast as possible, is going to be $15,000 to $20,000, which is totally fine, because in that process of them making $15,000 to $20,000, you're going to make $30,000 to $40,000. So, like, are you okay with somebody helping you make $30,000 to $40,000 a year?
And I've seen that so many times in my career, especially during my MLM days, where people would come in and they'd be like, well, I don't like you making money off of me. Okay, that's fine. I don't have to work with you then.
Yeah.
Because if I'm going to work with you, if I'm going to teach you how to do this, I'm going to make money off of you. That's how business works.
Yeah.
It's not just this particular model. That's business in general. If I'm going to give you my time has a value to it. So if you don't want my time, then I have other people I can spend time with. You can go over here and go and try and figure it out on your own, and I'll go work with somebody who values my time and doesn't have a problem with me making money off of that effort.
I think that something there is like the difference between the price and the cost of something. What's the cost of every day that you're not making what you could make with a great mentor? The price of mentorship is whatever the price is, right? $15,000, $20,000, $30,000, $50,000, right? I have friends who they go around and they're mentored by Tony Robbins. And just to be in his mentorship package where you get a 50% discount on all of his events, 8 or 10 events a year, or whatever, you got to pay $80,000 just to be able to get the discount, which is like, wait a second. So you're still getting the full price, but you get some private mentorship and stuff, but that's just to be mentored by them. I know somebody who was mentored by Ed Milet, $100,000 just to be mentored by Ed Milet. And so when you think about, like, everybody's paying for mentorship, it's not a unique thing. And the people who choose to pay it sooner in their career advance a lot faster, and they start making the type of income that they want faster than before.
Exactly. And it doesn't matter even if you're in the corporate world. The CEO is making money off of your efforts. Regardless of whether you're on salary, the CEO is not making a percentage of your efforts, but the CEO, your sales manager, all the way up through the management structure, they're all getting paid off of your efforts. That's how business works. Whether you're the boss or you're the lowest level employee, it works that way all across the board.
Yeah, and if they suck at helping you become productive, then they get fired. So in certain respects, you kind of fire yourself. So let's get back to the conversation of the insurance aspect, because a lot of people, they hear life insurance. I think it was Tom Hopkins that says, like, nobody likes anybody less than a life insurance agent. So they're just like a little bit.
It's one of the words that you hear. People hear the word life insurance and they automatically go into defensive.
Yeah, which is so fascinating, because you hear real estate agent in Arizona. There's over last time I looked, this may have changed, but as of 2024, January, there were 70,000 real estate agents that had active licenses. There was 20,000 that had their licenses not renew the year before, or that were scheduled to have their licenses not renew. But active real estate listings in Arizona, there was only 17,000 real estate listings. So there's like almost 5 agents for every listing. It's insane. But then you think of life insurance, there's 6+ million people here in Arizona, and total financially licensed people in Arizona who could actually sell some life insurance to you was under 10,000 people. So it's like the numbers are way off. We actually need way more people to have these licenses and be able to share this information. But it just, for whatever reason,
it's a matter of perception, because life insurance is not a sexy industry. Real estate is a sexy industry.
Why?
Because people, it's the way it's been built into our culture. If somebody says, I'm going to go get my real estate license, congratulations, that's awesome. Go get it. Go work hard. I hope you do well. Somebody says, I'm going to go get my life insurance license. All of a sudden, people don't answer your calls anymore.
I know,
it's really strange, because buying a house and buying life insurance are both very important life decisions.
Well, if you have a house, you should have life insurance.
If you have a house, you should have
mortgage. You probably have life insurance.
If you don't have a house, you should have life insurance.
I agree.
If you have a spouse, if you have kids,
if you're alive, you should probably have life insurance.
If you're alive, you should have life insurance. But it's built into the culture, and it's built into the perspective of, if I'm calling you and I say I'm in real estate, oh, cool. What's going on? What are the interest rates? How's the market? Is it a buyer's market? Is it a seller's market? I call you and say, hey, I want to sell you life insurance. No, I'm good. I don't need it.
It's like, what? Yeah, I don't know. There's a disconnect. Let's talk about, though, because there's a lot, again, people who listen to this, they don't actually know the answers to these questions. Right. Most people. they hear life insurance and it's this big wall that goes up in their mind and they just turn it off. So we're going to try and overcome that a little bit today. But what are like the overall, what are maybe 4 or 5 different types of policies that are the most common you see people using?
So you have 2 different categories in the life insurance business. You have term and you have permanent. And then within permanent, you got a few different categories there. But the big difference with the 2 categories is term. Everything has its pros and cons. Term, the pro, is that it's inexpensive. So if you're 35 years old and you're in good health, non-smoker, you could buy a 20-year term policy for probably $30, $35 a month. So will most people say yes to $30 to $35 a month for a $500,000 policy? Of course. But the con of term insurance is, let's say you're 35 years old and you buy a 20-year policy. That means you have to die before you're 55. Otherwise, you have your policy goes away. So you're going to pay into that policy your $30, $35, $40 a month for the next 20 years. If you don't die, then the insurance company keeps all of your money and you're now 55 years old with no life insurance. So that's a matter of, there are people as well that are like, oh, well, once I turn 55, I'll be financially independent. I won't need life insurance anymore, which might very well be the case. But what I would tell you is more often than not, that doesn't happen.
Well, let's ask this question though, around the term insurance question. There's 2 that I want to highlight here. What percentage of term insurance policies actually ever are utilized and pay out?
About 2%.
Okay, so about 2% of the term insurance policies pay out. Why would a consumer still decide to purchase that if they know there's only a 2% chance that it ever pays out?
Because the main reason why people buy term is because they don't want to pay a lot of money for it, and because they believe that at X point in their life, between 30 and 60, for most people, that's when they're in their peak working years. That's when they're married, they have families, they have the desire to protect their income. At that point, once they get past that, when the kids are grown, when they have a significant 401k or pension with their job or significant other assets, then they might say, well, at that point, I don't need life insurance. And that's a matter of perspective. It's a matter of choice. Myself personally, my belief is that you should have life insurance till the day you die.
Well, you sell it.
Yeah, of course. but I also think about that. I think about that from my perspective, me
Sure.
as an individual. Would I ever buy a term policy? Personally, no. I've had permanent my entire life. From the day I started my career, I was 27 years old when I got my first policy, and I got my first policy was a variable universal life, and I have never had a term policy. Not to say that's bad. If I'm sitting with you and you say I want a term policy, great, I'll sell it to you. No problem.
Do you have like a did you ever have family? Did you ever have these big mortgages and reasons why somebody would get a term insurance policy?
Oh yeah, absolutely.
And you still chose to only keep it in permanent structures rather than in...
I will sell you what's best for you. I'm not anti-term. If you say you want term, if you say you want a 10-year term, and that's what we decide makes the most sense for you, that's what I'm going to sell to you. Because a lot of times people, and this is especially when you're new in the industry, you learn as you get older, you get more seasoned. You don't worry about making a sale to pay your rent. You learn that by selling somebody what they want, they're not only going to keep that policy, they're not going to call you 6 months later and say, I don't want it anymore, and then you get a charge back. So they're not only going to keep that policy, but then they're going to tell their friends and family and neighbors and coworkers who they talk to when the conversation turns to life insurance, hey, you should go talk to my guy. He's really good. He respected my wishes. He gave me what I wanted rather than force on me what he wanted. So my personal perspective, I only have and only ever will own permanent. But I have no problem selling somebody a term policy if that's what they want and that's what makes the most sense for them.
Yeah. Okay. So term, the way I've always thought of it, and I think of it for my family is during my early years when I don't have necessarily enough money to buy all of the life insurance need. Let's ask this question, and answer it for them. How would you determine how much life insurance you actually need? How do I know if I'm being taken advantage of, being oversold or undersold life insurance? What's a good method I could use to just jot down on a piece of paper how much life insurance I should have on me and my wife? If I'm married, should my wife and I have the same amount? Should they have different amounts? Like, how would I determine the life insurance need of my family?
The best way to determine the amount of life insurance that you need is income replacement. There are other factors like debt and college education and stuff like that. But if you want to know just the most basic way to determine is income replacement. If you make $100,000 a year, you should have $1 million worth of insurance, because that will cover, if God forbid something happens to you, that will cover your loved ones, your spouse, whoever your beneficiary is, for 10 years. And the main way to think about it is, if you're married and something happens to you, do you want your wife or your husband to have to go out and remarry again right away just to be able to replace that income?
Well, I would say probably not. The argument against that is that I also don't want my wife to be lonely, so the chance of her remarrying is really high. And so then, do I want somebody else going to be spending all the money?
Going to be spending all my money. Yeah.
So like these are the two sides of it. Like, well, why would I give some other dude a bunch of money to spend?
Exactly.
I mean, she just got a lot more attractive actually because she's not as rich.
$1 million.
And so which way should I lean that way? So anyways, I'm being facetious for sure.
I know. And it's all a matter of individual perspective.
Right.
You know, if you make $100,000 a year and you say, I only want to cover debt and mortgage and my kids' education. If you have 3 kids, average college education is about $100,000 a year. If you have $50,000 worth of debt, $100,000 worth of mortgage, then you probably only need $600,000 worth of coverage. Mm-hmm. If you don't want to provide income replacement, then don't. There's all different ways you can look at it.
Yeah, and I would say with income replacement, something that gets overlooked, or maybe people think of, and this is a problem in general. Anytime somebody gets bestowed with a lot of wealth and they weren't prepared for, or they weren't educated, then what ends up happening is the wealth goes in and it gets spent on just anything and everything they can think of rather than reinvested. And so a good idea for a life insurance benefit would be, okay, I got this money. How can I get this reinvested so that 10-year term on a 50, let's say a 5% growth, that's $50K a year of interest that, well, that'd be on 10.
On $1 million.
On $1 million. That's $50K of interest every year that you're earning. So now you don't have to spend that down quite as fast. So maybe that $10,000 of income replacement directly could actually last 20 years rather than just the 10. Or you could choose to pay off your mortgage and then you have about 10 years worth of income. So there's a lot of different options after the death benefit's paid.
And that's also why, because you talk about, and you've mentioned this a couple of times, you talk about financial education. Financial education is super important because, there's all kinds of stories out there about athletes, lottery winners, people that just come into money that don't have any kind of financial education. They're usually broke within 5 years.
Mm-hmm. Yeah, they get out
because they go out and they buy houses and they buy jewelry and they buy cars and they travel. And I'm not saying don't do that. I've seen people, one in particular. I saw somebody I knew somebody. This was a relative of a friend of mine. Got a $350,000 lawsuit settlement. Within 1 year, had nothing left.
It took that long. Yeah. I know people who spend it in months.
You could go through it in 3-4 months. I mean, but I was lucky enough to get a financial education starting at 27 years old when I was broke. Okay. So that way, by the time I had money, I didn't have to worry about it. I like nice things. I have my hobbies. I'm a worldwide traveler. I call myself a travelholic who will never go to rehab. And the fact that when I'm in Phoenix for more than 6 months, I start to get anxious.
Well, that's just because it's hot as heck.
Well, that is. But the point I'm making is that I like to spend money. I like nice things. But I also have learned through not only receiving my own financial education, but also giving financial education to other people, how to budget properly, to make sure a certain percentage of my income goes towards bills, a certain percentage goes towards investments, a certain percentage goes towards taxes, and a certain percentage goes towards hobby. And that's how I approach every single paycheck. In my case, I work on 100% commission, but paycheck, commission check, same thing, money going into your bank account. But every single check that I get gets split up into those 4 categories because I learned early on how to manage my money.
Yeah, I think that's great. So let's get back to the different types of policies. We've kind of talked about term. I do want to just highlight one aspect of term, or you can highlight it, the difference between like death insurance, for lack of a better word, that only pays out when you die, or living benefit policies. Living benefit policies are somewhat of a new phenomenon inside of the industry within the last 5 to 10 years.
Last 5 to 10 years, yeah.
So I think that 2% number probably will increase as more people claim on those living benefit term policies. So what is living benefits and why would somebody want that on their on their policy? And if they don't have one, why would they want to renew or change their policy to make sure they do have it on there?
Personally, I think living benefits is one of the most important things that you can look for on a life insurance policy. Most policies in the past came with only what was called terminal illness. So in general, if you were given 6 to 12 months to live, like stage 4 terminal cancer, as an example, if you were given 12 months or less to live, you could actually use your death benefit while you're still alive. But that's a very narrow window of what you're actually able to use the money for. Today's living benefits have expanded. You've got terminal illness, you've got critical illness, you've got critical injury, you've got 4 or 5 different categories that are offered for things like in-home healthcare, paralysis. There's one company that I work with a lot because, in my opinion, they have the best living benefits available in the industry. They have about 25 different triggers that if you trigger any one of these 25 options, you can now use your death benefit while you're still alive. You can use it for medical bills. You can use it for home improvement. You can use it to go on a cruise around the world. You can use it for whatever you want because it's your money. You're just accessing your death benefit while you're still living, as opposed to it going to your heirs when you pass away. So living benefits is very important. Always look for, when you buy a life insurance policy, always look for the living benefits.
Yeah, I couldn't agree more. But what's the cost differential? Let's say I just want straight death insurance versus one with living benefits. Is it drastically more in cost? Like, what's the?
It's not drastically more. It's going to be slightly more expensive. Like for example, the company that I use that has the best living benefits out there, their monthly premium is probably going to be, if I estimate, 10 to 15% more. And that's just because the insurance company is taking on those added risks. They're taking on, if something happens to you in 10 years, they're going to be giving you your money in 10 years as opposed to 40. So they have less time to make
some money there.
So yeah, it's going to be slightly more expensive if you want just straight death insurance. There's companies to go with that are going to cost less.
Yeah,
but only about 10 to 15%.
Yeah, I would say marginally less. And I think that statistically, if we're looking at like the medical data and what that life insurance actuaries are looking at, then they say right now, right? I'm not an expert. So
I'm not an expert.
Not an expert in this, but they say about 70% of Americans at some point are going to need living benefits. So they're going to do your statistical, like, yes, 100% of everybody's going to die. So 100% of people need life insurance. Well, not everybody's going to die during that term. But if you have living benefits and it's covering you through age 55 to 70, there's a 70% chance you're going to be using that. Like, that's a very, very, very high probability.
Which is why also when you're younger, if you have a choice between term or permanent, just what you said there, between age 55 and 70, 70% chance that you're going to need your living benefits. Well, if you're 25, 30, 35 years old, as opposed to buying a 20-year term that's no longer going to be there when you're 55, buy permanent when you're younger, because then it will be there when you're 55.
So let's talk about permanent insurance, because there's lots of different ideas about it. On social media currently, they talk about all these different strategies you can use for it, and they rebrand it, they rename it, so get people to click on stuff. But what are really the main 3 types of permanent insurances that are going to be there until you die? And I would say there's probably 5 actually that would fall into that. But what are those types of insurance that would fit into a permanent structure, and why would somebody choose one over another?
Okay, so when I do my financial education, I tell people there's 4 types of permanent insurance. You have whole life, you have universal life, you have variable universal life, and you have indexed universal life. They all serve a different purpose. Whole life is the most common. It's the most well-known. If you go to a company like New York Life or Mass Mutual or Northwestern or any of the what are known as legacy companies, they're going to sell you whole life. That's what they do. The positive about whole life is, like anything else, if it's designed properly and paid for properly, you're going to have it your whole life. The negative about it is that even though it's a cash value policy, it may or may not actually be a cash value policy. If you're buying whole life, I always tell people, make sure you understand what you're buying. Now, I'm not knocking it. That's not the purpose of what I just said there. What I am saying is that make sure you understand what you're buying when you buy it, other than just buying a policy put it in the drawer and saying, I have X, Y, or Z. Then you have universal life. Universal life is another one as well that has cash value. That's a positive. The negative is that it's usually a fixed interest rate. I know we're in a period right now of higher interest rates, so you're probably going to get about 4 to 6% on your universal life policies. But depending on what you want to accomplish, that's all relative. Mm-hmm. Because we can go to the bank and get 4% right now on CDs. So do we if we're paying for life insurance and then getting 4 to 6% on the cash value, it may or may not grow to the route at the level that we want it to. Then you have variable universal life. I said earlier that was the first policy I ever got. When I first got started in the industry, the first policy I ever bought was a variable universal life. Now, if you buy variable universal, I have no problem with them because I consider myself to be a financial expert. I'm an investor. I follow the market every single day. The first thing I do when I wake up in the morning is I check all of my accounts. I'm that guy. I'm OCD when it comes to that stuff. So I do this for a living. In variable universal life, your cash value is connected to the mutual funds, to the investments. When the market goes up, you make money. When the market goes down, you lose money. Now, that's traditional investing. It's the same as your 401k. But the difference is if you're the type of person who checks your 401k every quarter and smiles if the balance has gone up and frowns if the balance has gone down, then variable universal life probably isn't a good route for you to go with your life insurance because you're paying even less attention to your life insurance than you're paying to your 401k. If you're an investor who does it for a living, and you pay attention to this stuff, then variable universal life can be a very, very good product. And then the fourth one, and this today happens to be my favorite, is indexed universal life. Indexed universal life, same as all the other permanent policies. You have a permanent death benefit, and you have cash value. Now, here's the thing too that I didn't mention about cash value is your cash value, when you eventually pull it out, is tax-free. And that's one thing that none of us like to do. We don't like to pay taxes, do we? So if you have the ability to build cash value inside of your life insurance, that someday when you get ready to retire, you can use that money tax-free, that's a very, very strong selling point to make. But now the difference with indexed universal life as opposed to variable or the other two that I just mentioned is the way that it's invested. If the market goes up, you make money. If the market goes down, you don't lose. Your principal is always protected. So if you have the ability to know that no matter what, you're not going to lose money, but you could make money, the benefit of that is that it's a lot more peace of mind. You don't have to be tracking your life insurance every day or even every quarter. Or I tell people when they buy an indexed universal life policy from me to look at it once a year. If you have questions, call me, but otherwise you don't have to worry about it. It's one of those out of sight, out of mind type of investments.
Yeah. And so I want to be clear here just for legal purposes. One, insurance is not an investment, correct?
Correct.
Okay. Sometimes we use the word investment in lots of different contexts, just like love in the English language, we use in a lot of different contexts. I love my dog. I love your shoes. I love you. I love the desk. I love the computer. I love my phone. I love the sun, whatever it is. So love, there's so many different ways that we're using love. In other languages, they have a lot of different words for it. We have one. Investment is kind of the same way. They say like the best investment is in yourself. The best investment, or like for me, I say I invest time with my family every day. I don't choose to say I spend time with my family because I invest it. Every time I'm spending time with my family, I'm getting a return on that, whether that's enjoyment or whether that's purely just we're teaching and hopefully that time turns into good memories or something. So investment can be meaning a lot of different things. And so what are you investing in is a question, but in context of insurance and other types of investments that you mentioned, like 401ks or mutual funds or those types of vehicles, I think it is important for people to understand that insurance is not an investment. By definition, investments by definition are
by legal definition.
Yeah, but
the Securities and Exchange Commission. Yeah, you're absolutely
It's important
right.
because they kind of get wrapped into the same conversation a lot, like retirement planning, investments, life insurance, things like that. They kind of just get thrown into these conversations altogether. But it is important to know that investments by definition are something that could go up and down, like you could win or you could lose. That's an investment by
Correct.
definition. Insurance by definition is transferring the risk of loss from oneself to another entity, person, or company. And so insurance by definition, it's like the difference between a train car chassis, wheels, or whatever, and a car, sedan, right? They both are transportation, but they are wildly different. They don't have the same wheel structure. They don't have nothing the same, right? Other than they both transport things.
They both move forward and get whatever's on top of them from point A to point B. Yes, but otherwise they're nothing the same.
Yeah, so understanding that this is something that we have to, when we're using language colloquially, it doesn't necessarily always match what our perception is. And so I just want to be very clear. You use the word investment a lot of times in what you were saying, which I don't think is a problem. But for purposes of this, I want to be clear. Insurance is not an investment. It's not. So insurance is an insurance product which transfers risk of loss, specifically a loss of death.
The primary purpose of insurance is insurance.
And it's the death benefit. It's the primary purpose of the insurance is the death benefit. So how does that relate? Because we have this, when we're talking about insurance and talking about death benefits, and you mentioned that you could pull money out of it. These are like the myths that I see this on Google, I see this on social media all the time. People are asking, or they're selling this idea of tax-free out of your life insurance, or they're selling the idea of being your own bank, or they're selling all these things that they're trying to get you in a 30-second clip to decide to call them. Which on one hand, I think, okay, I can respect that you're doing marketing, whatever.
Yeah, that's the marketing and the sales process for anything.
Yeah, unfortunately, though, a lot of misconceptions come from that because they're mismarketed. They're not actually being honest and true about what is the case. How is a life insurance policy similar to a piece of real estate? Like, explain the act of getting money out of a house versus the act of money getting out of life insurance. How are they similar?
Well, when you take money out of a house, you have it depends on, and I'm not a real estate expert, so
sure.
That's okay. I'm going to live.
Go for it.
Yeah, go for it. When you take money out of a house, depending on if it's your first house, if it's your primary residence, there's different tax laws that apply to everything. So, for example, I have a house here in Scottsdale. It's my primary residence. It was my first house that I bought. And per my understanding, if I sold it, up to $250,000 of the equity would be considered tax-free.
Is that because that's what your cost basis was?
Above my cost basis, yeah. So I bought it for X, the cost basis. Let's just say hypothetically the cost basis was $300,000, and I sold it for $550,000. Per my understanding, with real estate, you don't pay any taxes on that because you have a $250,000 allowance on that.
Personal residence.
Yeah, on a personal residence. And when it comes to life insurance, you're absolutely right. The primary purpose is life insurance, and you can't just put money in today and take it out tomorrow and think that you're going to have any type of tax benefits. It's considered long term. If you bought it when you're 25, there's going to be different rules if you need to take the money out at 28 versus if you take the money out at 65.
So let's say your house value went up to $1 million though, and you wanted to get access to that equity, $700,000 of equity, but you didn't want to have to pay taxes on it.
Right.
So you don't want to sell your house because then you don't have a place to live. You don't want to pay taxes on it. So how would you get access to that equity without having to sell your house?
Do like refi cash out, or do a HELOC or something like that allows you to take money out. But then, either way, when you take money, you're paying for it.
Right. And that's not any different in life insurance.
Correct. Yeah.
And this is where people are, again, these get technical words, but I wanted to have this conversation with you because I know that you can accurately share this information. And I think that I get frustrated when people in the populace don't know what's happening. So when you pull money out, if you withdrew money out of your house, as in you sold your house and you got some of that, it would be a taxable event. If you take money out, it's a taxable event. If you loan money, do you ever pay taxes on a loan?
In real estate or in life insurance?
Anywhere. If I did a cash out refinance and I could get the money from the bank, but what do I owe the bank?
Just the interest.
Well, as much money as I gave them. So if I had a $300,000 house and that house went up to $700,000 and I did a cash out refinance and I now get $400,000 from the bank, the gap between 300 and 700, how much do I owe the bank now?
The $400,000 plus the interest rate.
Plus the 300. I owe them a full $700,000. I still have a $700,000 mortgage. if I still had $300,000 mortgage,
I was thinking just from the amount that you took.
Yeah,
out
exactly.
low.
But I think this is important.
You're absolutely right.
This is important for people to understand that when you're pulling money out of a house, the way that you're able to do that, whether that's a home equity line of credit or whether that is through a cash out refinance, the reason you got cash is because you collateralized an asset. And you said, look, I'm going to allow debt on an asset so that I can have the cash. That's what happened. If you wanted to actually take the value of that home out without incurring debt, then you would have to sell the asset and you would have to pay taxes.
Yep.
That's it. Same with crypto. That's currently, maybe that changes with Trump. Gold and silver, any one of these things, if you sell the asset, then that's when taxes are charged. Well, what happens when somebody dies? They own this real estate, they paid $300,000, and then they die and their house is worth $1 million. So when somebody sells that house, what do the children owe when they sell that $1 million house?
There's, as the saying goes, the only two things that are certain in life are death and taxes. So when you sell a house, you're going to have an exception. I believe it's 1 million per person or 1.5 million per person right now that is the exception. But if you have a significant net worth, the kids are always going to be taxed on the assets that get sold after the parents die.
And so one of the things that I've found, well, they would always get taxed. They get a new cost basis, so that steps up. If the parents bought the house for $300,000, if they had sold the house while they were still alive, then they'd owe $700,000. They'd owe tax on potentially $700,000. That's increased equity. But if the kids sell the house after the parents die, then that goes into a cost basis. They get a step up in cost basis to the $1 million. If they sold it for the amount the house was worth on the day the person died, then there's no taxes owed on the sale of that piece of real estate.
That's interesting. I actually didn't know that.
Yeah. So that's how real estate works. The reason I'm comparing those is in life insurance, the way you're getting money out of your life insurance policy, if you withdraw that money, you're going to pay taxes on it. Mm-hmm. So most people are not withdrawing the money from it. They're collateralizing their death benefit and loaning against their death benefit.
Correct.
And so that's a big thing that people don't understand is they think, well, and that, to be even more accurate in this conversation, they're not loaning against their death benefit. They're loaning against their cash value, which is part of their death benefit, but not entirely their death benefit. And so those are some distinctions that I think, for the purpose of the podcast, I want people to understand what's going on when somebody's pulling that money out.
And it does come down to, at the end of the day, it comes down to understanding what you have, understanding what you buy, because people that are in sales, their job is to sell. You know, that's what we do as a career. That's how we make our bills. That's how we live our lives. When you're in sales, our job is to sell. But your job as a customer, as a client, is to understand what you're buying. When you hear a commercial on TV, for example, me being in the life insurance industry for as long as I have, when I hear some of these commercials on TV, and I won't name the companies, obviously, but when I hear some of these commercials, the only thought that goes through my head is, I hope people don't listen to that and believe that what's being said on this commercial is real, because it isn't.
Yeah, that's how I feel about even social media. I'm just like, oh my gosh, people are saying
if you see it on social media, there's about a 95% chance that it's not real. No, that's
or that
the world. It has exaggerated
elements of truth.
Yeah.
It has elements of truth, and I understand that you have 30 seconds to grab somebody's attention. But I think some things are so good that you don't need to exaggerate them. They just are good as they are, and they'd be better if everybody understood how good they actually are.
Mm-hmm. Well, life insurance is one of those things that it's very, very important, and it's very, very good. But you can also get yourself in trouble if you don't understand what you're buying. You know, there's one thing, and this has always been my thing with term, is that companies will sell term is that it's guaranteed till age 95. Well, is it actually? No. If you look at your table, let's say you buy a 20-year term policy at 35, it's going to be a certain price until you're 55 because it's a 20-year level term. And is it guaranteed till age 95? Yes. The insurance company will insure you until age 95.
At the health rating that you got.
At the health rating that you got. But every year after that, it steps up in price. So by the time you hit 95, you might still be able to get insurance, but you're not going to like how much it's costing.
Yeah, I mean, you'll be priced out quickly.
You'll be priced out within a few years, yeah.
Yeah, which is unfortunate. And you could spend way less on some permanent policies. So if somebody, I mean, clearly you know what you're talking about and you can help somebody in this. If somebody wanted to work with you, what's your new company that you've started? I say new company, but like where are you working now? And where would they go to find access to you? And if they're interested in working with you, where would they go?
So if somebody wants to get a hold of me, there's a few ways you can contact me. My phone number is 480-525-7129. My email is Terpstra, AZ. So C for Chad. Terpstra is TERPSTRA@gmail.com. And you can also find me on most social media, Facebook, LinkedIn. Those are my two main ones. I have some of the others, but they're for other purposes. If you're looking to connect with me on Facebook as an example, under Chad Terpstra. And LinkedIn the same way. You can find me. Those are the four main places you can connect with me.
And let's say somebody did decide they wanted to just learn more about insurance, or not just insurance, but any type of financial education. What would that first 2 or 3 meetings look like if they were to sit down with you?
The first meeting is always a consultation. I want to find out about you. I want to find out what your needs are. I want to find out what your desires are. I've developed this over the years, and this comes from being 20 plus years in the industry, is that I'm never going to try to sell you on the first appointment. I want to build a relationship with you so that you know that I'm looking out for your best interest. There have been times in the past, I'm not saying it doesn't happen, but it's incredibly rare, where people are like, I know what I want. You have what I want. Let's do it right now. In that case, I'm going to do it. I'm not going to say, oh, well, I don't sell on the first appointment just because you want it right now. I'm not going to say, oh, we have to do a second appointment. If you come to me and say, this is what I want it from you, let's do it right now, I'm going to do it. But otherwise, I'm never going to sell to you on the first appointment. And the practice that I've adopted throughout my career is that I'm never going to push you until you're ready. If that's on a second appointment, if it's on a 6-month follow-up, if it's on a 1-year follow-up. Now, the thing that I tell people when it comes to life insurance is don't wait. If you want it, if you need it, get it. Because life insurance is one of those things that we're always going to put off. We can say, oh, I'll get it in 3 months. Oh, I'll get it in 6 months. Oh, I'll get it when I get a raise. Well, that 3 months turns into a year, turns into 5 years. Before you know it, you started having that conversation when you were 35. Now you're 50, and you're in a whole different scenario. So I will push you a little bit to do what I know and what you know you need to do, but I'm also not going to push you to the point that you're like, I don't want to do business with this guy. I've had people that I've waited 2 and 3 years for until they're ready to do it. But they also respect the fact that I've respected them. Mm-hmm. If you're not ready today and I push you today, I think we covered this a little bit earlier. You're going to call me tomorrow and say I changed my mind. Well, then what did I waste 2 hours of my time?
That almost starts worse, because then people leave thinking, oh, I did do it, but then I canceled and this is why. And then they don't ever revisit it, or they really don't for multiple years revisit it. And that hurts that family potentially. Mm-hmm. I've had clients that
because they get a bad taste in their mouth.
Yeah. So I think that just being respectful, and that's what I've really enjoyed about getting to know you, is that I really believe that your goal is to help people, help educate people. And as they go through that process, they reach out to you and have that conversation, that you're going to be able to direct them to what's going to be best for them. And then they get to choose whether they want to do that. So I think that's the best approach. That's why I wanted to have you on and have this conversation with you, because we need more people having this conversation.
Ultimately, what I want is, if you become a client of mine, I want you to be a client for life. And it's kind of an oxymoron, because we're talking about life insurance. So I say I want you to be a client for life insurance. But I also want you to feel comfortable recommending your friends, family, everybody you talk to. When you hear a conversation happen about life insurance, I want you to trust me so much that you have no problem saying, go talk to my guy. He'll take care of you. That's what I'm looking for, because the only real life insurance client is a client that eventually, and I've only paid out a couple of death benefits in my life, which I've been lucky in that regard. But the only real true life insurance client is a client who buys the initial policy from you, and you deliver the death benefit to their family eventually, if you're still in the industry, which in my case I've been doing it for 20 years, and I don't see myself stopping anytime soon.
That's good. I love it. Well, thank you guys so much for listening and being here. Reach out to them. I mean, you're only going to get benefit if you reach out and get educated. There's nobody going to be hurt by more education. I know we've covered a lot on this podcast and this show, but really focus on what does that look like moving forward and how can you benefit and grow by getting educated and taking care of not just your family, but other families. Thank you for your time. I appreciate you.
I enjoyed being here. This was a lot of fun.
Yeah, and we'll catch you guys next time on the Fuel Your Legacy Show.
Call now, don't hesitate. 385-323-2493. Change your fate.